This is MacroVoices with hedge fund manager Eric Townsend, the free weekly financial podcast targeting professional finance, high net worth individuals, family offices, and other sophisticated investors. MacroVoices is all about the brightest minds in the world of finance and macroeconomics telling it like it is, bullish or bearish, no holds barred. Now, here are your hosts, Eric Townsend and Patrick Ceresna.
Let's move on to this week's Postgame chart deck. Listeners, you'll find the download link in your Research Roundup email. Now, if you don't have a Research Roundup email, just go to our homepage, macrovoices.com, click the red button that says Looking for the Downloads. Patrick, the title is What's Next for the Markets? What's next for the markets?
All right, well, let's start on page 2 with the S&P 500. And one of the things we talked about last week was how oversold the market was. And we saw that there was an attempt in late May for a break to a lower low. Didn't stick. All the makings were there for simply the market to have a relief rally. And my view back then was that we could easily see a move back to 4,300 on reaction. And it mirrors a lot about the kind of rallies we saw in late January and mid-March, where there were these bear market rallies that kind of just relieved some very oversold conditions. The question really now is this something different, or is it to be just expected to be the same? Going into next week, there's still room for this S&P 500 to tack on an extra 100 points and kind of grind higher a little bit on the short term. But we're coming to a really important judgment moment where if this bear market has still got teeth, then the traders are going to start using this strength to sell into, and we should see the market start to roll over, and that's going to be the thing to watch definitely into next week.
Let's move on to the dollar index on page 3. What do you make of this chart?
Well, I just marked the 100 line, which conveniently works to very close to where the 50% retracement of the entire bull run since the start of the year lies. And typically, whenever you have a bull trend, often the secondary corrections are about half of the length of the prior rises. And so we have a situation where, the market at this juncture, or the dollar anyway, has had a great run, and now we're giving some back. To me, whether the dollar remains in a bull trend and starts to turn back up is whether in the coming week or two we see that dollar index sustain above the 100 level. And I like it because it's a nice round number. And generally, while we may even temporarily poke below the 100 level here or there on some consolidation, if we generally see that level hold, I think that this will be a very key kind of pivot area where the dollar may once again go back to reset testing its highs or even making another bull push. I think it's important to give the bulls the benefit of the doubt on the short to intermediate trend. I know you were referencing during the market wrap, the Luke Groman kind of scenario where inevitably the dollar will go through a weakness cycle, but that may not be the story for 2022. And whether there is another full bull leg ahead is, in my mind, all about whether or not this dip gets bottom on the dollar.
Great minds think almost alike. You're using a fib retracement. I was just looking at the peaks just below the left edge of your red line there, right around 99. But everything else you said, I'm exactly on the same page. It's basically if we stay above wherever that support should be. You say 100, I say 99, whatever, in there somewhere. If we can stay above that, I think that all indications are that the dollar rally is still on. If we saw a break substantially below 99, closing a weekly close below that, I'd start to reconsider that view. Now, normally when we talk about the dollar, you like to also look at the dollar euro chart. But this week you've got the dollar Japanese yen chart. How come the change?
Well, I was just highlighting because this is the one that's sort of bucking the trend of all the other cross currencies. And so while we've seen like the CAD and the Aussie all kind of move in unison with this dollar pullback, what we've seen here, first of all, the Japanese yen during the U.S. dollar against the Japanese yen anyway between March and April had an extraordinary 2,000 pip run on the upside. It was where the dollar strength was most evident, and while we've seen that consolidation in the dollar, there's a very distinct breakout attempt here on the U.S. dollar against the yen. And the last time this US dollar yen cross was where the bull run started. And so I'll be really curious whether or not that US yen chart breaks to a fresh new high, and whether that really starts to advertise that the next dollar leg higher may be underway. And so watching as we approach this highs and what happens into next week is certainly going to be on my mind. With that said, Eric, I want to move on to page 5 where I have that crude oil chart. And we were talking about the break on the July contract of those March highs as being something significant. And we definitely saw an attempt to break above those highs. It gave initially some of it back. But what was interesting is that going into the OPEC meetings, we saw a little bit of a pullback. It was, a few dollars down on the day, and almost immediately reversed and got bought on dip. And when I see that type of price action, it means that this is being still very well accumulated. And it really looks like this bull trend is still intact. When I look at this, I just don't see how we don't see 120, 125 in the coming week. It just, oil looks so strong here. The other thing to observe was the fact that gasoline futures continue to pump higher. Nat gas reversed back up. So these energies continue to be the strong bull market part of the commodity space. And I don't see any reason for that to change. Do you have a view that's any different than that?
No, I think that's very similar to my view. All I would say is what it would take to turn this around is one of two things. Either you get widespread belief that a recession is imminent in the United States. As much as I think there's a good argument to be made for that, it's a very unpopular view, and as long as that view stays unpopular, oil keeps going up, not down. The other thing would be some huge resolution of some kind. There's a truce between Russia and Ukraine, and they decide to settle their differences, and everybody gets happy, and there's no more sanctions against Russia. I just can't see that happening either. So I think it's up and away. And when you consider that we didn't restock inventories during the spring, it's a setup for this summer. By the time we get into August, late August, I think we could be looking at substantially higher prices, well above 130, maybe even a new all-time high above 147, which was the previous high from 2008. Let's move on to gold. We heard Ronnie's take. What's yours?
You know what? I think Ronnie really does have like a bigger picture view, which I think is something that I generally agree with. I would label myself a gold bull generally, but my concern on the short term has been very much that it seems that gold has been more or less a cross currency to the U.S. dollar, and when the U.S. dollar had its substantial strength, it weighed heavily on gold when priced in U.S. dollars, and that now that we've seen the dollar in this type of a correction, it's allowing some of that pressure to be taken off, and we're getting a bounce in gold, no different than we're having a correction in the dollar. This, naturally would push gold towards 1900, and on page 7 where the silver chart could push it to 23 and a half. But my spidey senses are kind of in the camp that if the dollar was to suddenly reverse and begin another bull run, it could easily on the short term push gold right back down to the bottom end of its ranges. And I think that in order for gold to set up for a more meaningful bull run, I think that we're going to really have to see how the dollar story plays out. And that's obviously just one of the scenarios, but that's the one that I think I want to be tracking here for the next couple of weeks and see whether that correlates.
Patrick, let's move on to copper futures on page 8. Now look at the size of that green candle.
Yeah, no, and I'm actually a little bit surprised. But we are seeing a lot of these industrial metals all have a very positive reaction. Even the iron ore plays having a really good run in the last couple of days, and this copper breakout here came right into the 450 level, which was a very important pivot for me. And one of the big things to watch here is whether or not going into next week, copper gives back the breakout attempt. I don't have a chart, for instance, on something like Bitcoin, but when we saw that Bitcoin breakout candle earlier this week, almost immediately came a sell candle that gave back the entire breakout, and that usually is a sign of the distributive market. And what I'm going to be watching on copper is whether something similar to that happens. Like, will we see that traders come in and use this strength to sell into? Is this green candle advertising the beginning of another bull run in these commodities. One day doesn't make a new trend, so I'm going to be watching very much over the next 3-4 trading sessions as to how the bulls respond to this breakout and whether or not they follow through on it.
Well, listeners will have to tune in next week to find out how that goes, or if you don't want to wait that long, you can also sign up for a free trial of Big Picture Trading and get Patrick's chart decks every single day of the week. Information on pages 9 and 10 of the chart deck, or just go to bigpicturetrading.com.
That concludes this edition of MacroVoices. Be sure to tune in each week to hear feature interviews with the brightest minds in finance and macroeconomics. MacroVoices is made possible by sponsorship from BigPictureTrading.com, the Internet's premier source of online education for traders. Please visit BigPictureTrading.com for more information. Please register your free account at MacroVoices.com. Once registered, you'll receive our free weekly Research Roundup email containing links to supporting documents from our featured guests and the very best free financial content our volunteer research team could find on the internet each week. You'll also gain access to our free listener discussion forums and research library. And the more registered users we have, the more we'll be able to recruit high-profile feature interview guests for future programs. So please register your free account today at MacroVoices.com if you haven't already. You can subscribe to MacroVoices on iTunes to have MacroVoices automatically delivered to your mobile device each week free of charge. You can email questions for the program to mailbag@macrovoices.com, and we'll answer your questions on the air from time to time in our mailbag segment. MacroVoices is presented for informational and entertainment purposes only. The information presented on MacroVoices should not be construed as investment advice. Always consult a licensed investment professional before making investment decisions. The views and opinions expressed on MacroVoices are those of the participants and do not necessarily reflect those of the show's hosts or sponsors. MacroVoices, its producers, sponsors, and hosts Eric Townsend and Patrick Ceresna shall not be liable for losses resulting from investment decisions based on information or viewpoints presented on MacroVoices. MacroVoices is made possible by sponsorship from BigPictureTrading.com and by funding from Fourth Turning Capital Management, LLC. For more information, visit MacroVoices.com.